Hey traders, it's time for another video about Japanese candlesticks. But first remember to watch the previous video where I have covered the basic stuff you need to know about Japanese candlesticks. Now I'm going to show you dojis, pin bars, and a strategy that's called the Pinocchio Strategy based on a candle formation called the pin bar. So let's start by looking at a chart here. Here we have several, in this area, here we have some candles that we can call dojis. The textbook version of a doji looks like, you can see this in the picture here. The doji, it has candle wicks on both sides, and then in the middle you have basically there is no candle body, it's just a line. So this one looks like the textbook version of a doji candle. As you can see, the candle wicks are on both sides because price was pushed down and it was pushed up. So this is a classic doji, but we can also consider these other candles dojis as well. So this is what I wanted to show you, that dojis can differ from the textbook version that you can Google and find on the internet. As you can see, even this large candle here can be considered a doji because the price was pushed down, it was pushed up. So indecision, the body is small, closed here in the middle. So these are some types of dojis. And in all cases, when you have to look at the candlestick and try to find out what it's trying to tell you, you should look at the big picture, not just the candle. You shouldn't just trade based on the candle itself because they differ and they come in in uptrends and downtrends. So you should look at the big picture to see what the candle is trying to tell you, but you should look at several candles and the price itself. So bear that in mind, because you're going to get confused and see that, well, this one looks like a doji, that one looks like a doji as well, but it's not really the textbook doji. So they differ, but you will learn in time. And then the next one, you can see it says long-legged doji. Well, as you can see, some of the candle wicks are shorter, like on these candles, and then on this big one, the leg, which is the candle wick itself, or the tail, if you wish to call it, or the shadow, as they also they call it, is the same thing as the candle wick. So in this case, it's longer, but it just depends on which candle you're comparing to which other candle. If we are comparing this one to this big one, then this one is long-legged. Or if we are comparing this smaller doji here to this one, then this one is a long-legged doji. So everything is relative. That's what I'm trying to tell you. Look at the big picture. And the next one, as you can see to the right, it's called a dragonfly doji. I'm sure you can figure that out. It's when we have one here, as you can see the arrow here. It's not really exactly looking like in the picture. As you can see, it's not the textbook dragonfly, but the principle is the same. The price was pushed up, the body closed up. So you can see the body is a little bit bigger than in the picture, but this is a dragonfly. What does it say? It says that a reversal of the trend might occur, that the price might go up. And as you can see, the price did go up, at least for a few hours before it retraced back. So remember, the doji, indecision in the market, because the buyers and sellers are at an equal level, okay? But in this case, it was pushed up, so dragonfly just indicates an upgoing, a reversal, bullish reversal in this case. And then we have the opposite version, and this one, so the next in the picture here, the gravestone doji. As you can see, it's an inverted one. So the price was pushed down and the body is very small at the bottom after the tail, so at the bottom here. So it's a gravestone, indicating basically the opposite of what the dragonfly indicated. So as you can see, it did after a while price did drop. So after this candle indicated a drop, a reversal is coming. So first we had the upgoing trend, the buyers were in charge, and then the sellers came back. You can see you have almost another gravestone here. This one is much clearer, but they don't have so much volatility. I like to base my analysis on the candles that have more volatility, like this big candle here. So if they're bigger, then that means more volume. Okay, it means more traders, more sellers, and more buyers, depending on whether it's a bullish candlestick or a bearish candlestick. So I don't like these smaller candles because there's not much volatility in the market. So it can be because it's late, the bank day is over, the European session is over, the New York session is over, the US session is over, sorry. And that's why you get the smaller candles. And then the big ones, it can be because there's a lot of volatility, and then there's news, the fundamental announcements. So the bigger candles are often better indicators because there's more volume in them. So now you understand these types of dojis, and then the last one is just the price doji. Is just when you get a line, just a line. You don't see the candle wicks on either side. Don't have one clear here to show you, but as you can see, it's just like a support line, because or resistance lines for that matter, because the price opens and closes at the same level. So you just get one line, one flat line. That's all there is. That also indicates indecision. It opens and closes, so neither buyers or sellers are in charge. They can't get the price up, they can't get the price down, so it closes at the same level. Okay, so I hope you understand that. So remember, look at the big picture. Now let's move on to another candle called pin bars. And it's here, I will show you. It's not really clear because if you look at this candle, you might think, well, this looks like the inverted, this looks like the gravestone, right? Remember the gravestone? So, but if we would go down a few time frames, it's much more clear. Now you will see that in a moment. Here is our candle. So let's remove this. As you can see, thought I'd put an arrow here so you can see this candle, this long candle wick. You see this long candle wick? Pin bars. Remember pin bars? Why is it called a pin bar? Look at the picture here. You see, remember basic pins? They have a body, and then there's a long needle attached to it. So the body can be at the bottom or at the top. Okay? And this is basically a battle between bulls and bears in the market, the buyers and sellers. So always think candlesticks in your mind. Think of it as a battle between bears and bulls. Basically, bulls are the buyers and bears are the sellers. So in this case, the sellers won. Why? Because even though this candle is still blue, which means it's bullish because price closed higher up than where it opened, it still it still shows that the bears won because they pushed the price down from all the way up here. So if you had looked at the bigger picture, you would have noticed, okay, price is trying to break this resistance, this earlier resistance, and it did, but it failed because the sellers won. They pushed the price down and it closed below, well below the resistance. And this is a daily resistance on the daily chart. You can look that up yourself based on the price here at 1.12254. So this pin bar indicates a reversal. Okay, it's kind of like the gravestone in this case, because it indicates a bearish reversal, that the price is going to fall. And as you can see, before price fell, which it very well did, the price continued up all the way and came back all the way up again to where this candle wick touched earlier, with this candle reached before. So some traders like to wait for price to come up, retrace to 50% of the candle body of the candle of the pin bar candle before they enter a trade. Some traders enter directly. So this can be used as a strategy, the Pinocchio strategy. I'm going to show you. We have this article on binaryoptions.soc.com for review of Pinocchio binary options trading strategy. And it talks about how we use the pin bar candle to trade, whether it's a bearish pin or a bullish pin. And you can read here what the disadvantages are and the conclusion. You have some pictures here as well. So basically what you should do, what you look for, is pin bars on your chart. And obviously you want to go with the trend. So if we zoom out a little bit on our chart, we would see that go to a higher time frame. Now you can see the price is in a downtrend because price is falling, and this place, as you can see, is a resistance. So now that we got this pin bar on the hourly, it looks again more like a gravestone, but is pretty close to a pin bar. But on the 5-minute chart you could see it was very well a pin bar, a good looking volatile pin bar with lots of volume, because it was really big in relation to other candlesticks. So once you see the bigger picture, one more time, the bigger picture, that you see the price is falling on the higher time frames, you have a strong resistance. The price is repeating what it's done earlier, which is dropping, touching resistance, dropping again, touching, trying the resistance, and then dropping again. So in this case, you got a good indication with the pin bar with the hourly candle closing like this, and also the 5 minutes. So it was up to you. If you took the signal based on the hourly, it was safer. You could have given it at least twice the time frame, which is 2-hour expiry, and you would have ended probably down here, so you would have won this trade. If you would have traded the shorter time frames, then it was a little bit more dangerous, because as you saw, the price did retrace. So you have to adapt this to I don't like to take short term expiries when I have lost so much leverage. As you can see, we lost so much leverage, so I would have rather waited for a second touch. And you can confirm using stochastic or other indicators, EMAs, stochastic, RSI. So look at the bigger picture. I hope you understand now by seeing this that just because you have a pin bar, you don't just immediately jump in a trade. Because as I said, if you had looked at the bigger picture, you would have had a better entry. You could have used indicators or look at the higher time frame and adjust your expiry thereafter. So don't just go after the candlesticks, but study price action, learn price action, and think the market as buyers and sellers, and that's going to give you a lot more wins. And if you don't have any experience but you still wish to try out, I suggest you come here to binaryoptions.soc.com. I will put all the links below, and look at this pin bar detector. So read this review about the pin bar detector for binary options. It will find pin bars, obviously, as you can see in the picture here. So it will tell you if there are pin bars. So it's not really that accurate. As you can see, some pin bars are not really pin bars. And you can read this article and find out what's good with the indicator, custom indicator or not. And you have to install it. It's not in MetaTrader. So come here and read it, find out where to download and how to install it. So I'll put the links below. Remember to study those before you jump in. And I think that's all for now, for this session. And don't forget to like the video, please, and subscribe, because remember, we do some live broadcasting from time to time, at least every other week, and I upload plenty of other educational videos for you. So watch those if you want to learn how to trade like me using price action. If you have any questions, leave them down below in the comments. I will get back to you. Okay guys, thanks for watching.